Hey everyone, it's Mike Bonn at the Cash Flow Company. Today we're going to figure out how much you could afford in a house when you're purchasing it with a DSCR loan. If you're out there shopping for a rental property and you're going to use DSCR, how do you know if it qualifies? What's the maximum loan? Today we're going to go through those calculations. I think the easiest way to do this is actually do an example. So we're going to run through an example of what the maximum amount you could buy using DSCR and still qualify for that loan. Remember, DSCR focuses on a DSCR ratio. The DSCR ratio is simply the break-even point for that property because DSCR looks at least a DSCR ratio of 1. And guess what 1 is? It's just the break-even. When your expenses, and when they talk expenses, it's taxes, insurance, HOA, flood insurance, and mortgage payments equal your rent. So as long as those break even, you get the better rates in DSCR. We want to go through exactly, if you're looking out there in a certain area, what is the maximum you could purchase a property for and still qualify for the DSCR. So what are the numbers? What are the figures we need when we're looking to calculate our maximum purchase? Just remember, we're talking about your costs have to equal your rents. If we know what our rents are, and that's where we're going to start in this area, if we know what our rents are for the area, and we're going to know some of our costs as we go through this, we could easily calculate what our maximum loan amount is and then purchase price. So let's just go through an example. Let's just say the rents in the area that we're looking at, let's keep it simple. Let's just say they're coming in at $2,500. So we know to use DSCR and to keep it at that break even or 1, we have to keep all of our costs also equal to or less than $2,500. We are in real estate investing. We're hoping that our costs are actually less than our rents. We actually make cash flow. But for DSCR, at the very least, we want these two to match. So let's run through the numbers. We have our rents, our income, which equals the $2,500. Now let's look at an example because we have to kind of construct this. In real estate investing, it's about financing. It's about leverage, using other people's money. So we have to be able to do some calculations. In this case, let's just look at an example of the three things that we're going to use in this example are taxes, insurance, and HOA. Just remember, there also could be something like flood insurance in here if you're in an area that has flood insurance. But in this example, we're going to say our taxes are $1,200 a year. Our insurance is $2,400 a year. And we're going to say it's an HOA of $200. And this is monthly. So we've gone out, we've researched the area, we've figured out taxes are about $1,200. We've talked to our insurance agent. Insurance is going to cost us about $2,400 a year. And we're looking at a condo complex here, and HOA is about $200 a month. When we go through this, what we're going to find out is we're going to come up with a rough number or estimate just to get us into the ballpark. Once we actually find a property, we're going to go through these same numbers and make sure it matches up. But we need to know where to start when we're looking for property. Insurance, like I said, we called around $2,400, 12 divided by 12, that's $200 a month. In HOA, in this case, it's $200 a month. Altogether, the 100 plus 200 for the insurance plus 200 for the HOA is $500 a month. So we know our rents are $2,500. Now we know at least part of our expenses, remember they have to equal, is $500. The only thing we're missing now is the mortgage. So we have taxes, insurance, HOA, now we just need the mortgage. So we take the $2,500, subtract the $500, and we get a maximum mortgage payment of $2,000. Let's just run through that. We have the rents of $2,500. Remember what we said, and we had the $500 in the expenses. So that leaves $2,000 that we could use for our mortgage, monthly mortgage payment. So our monthly mortgage payment is the max of $2,000 if we want to qualify for a DSCR and keep it at 1. Remember, the lower the better because that just means more money into your pocket. But how do you convert the $2,000 now into how much you could afford in a loan? There's a couple of easy ways. Number one, we've just added to our DSCR calculator another page, put in the information from the payment to what your interest rate is. So you're going to have to call around and figure out what kind of interest rate do I qualify if I put 25% down. So you are going to have to get some more research, just like we researched the rents, went out to Zillow, rents.com to figure out what the rents are in the market. we also have to figure out what rate we qualify for in the DSCR. So you call around, you find that out. You take the information, you have the $2,000, and let's just say for this case, you qualify for an 8% DSCR rate on your interest for a 30-year mortgage. Now we know a few things. We know that we can afford $2,000, we know it's 8%, and we know it's 30 years. How do you come up with a maximum loan amount? Well, like I mentioned before, there's a couple ways. Number one, we have that free download, the DSCR calculator at thecashflowcompany.com. You can download it, it's free. There's another sheet in there that just helps you figure out what's your maximum loan. It's just something that's been added, so if you had the calculator before, you may need to update that. Or you could just go to something like calculator.net and play with it, which means you put in a loan amount, you put in your interest rate, you put in the years, and you figure out until it comes to about $2,000. When we put this into the calculator, we figure out that we can now maximize loan to break even is around $272,500. So when we're looking for properties or we're looking to refinance in an area, we know that the maximum loan amount that we could get and qualify for the DSCR is $272,500, or approximately, within a couple $100 of that. And when I say approximately, all these numbers are going to tweak a little bit. Rents might be a little bit different, taxes and insurance, even the rate. So you just want to be able to get a ballpark of where you could be. But this is your loan amount, but that's not your purchase price, because on any kind of loan, you're going to have to put some money down. You're going to have to put either 20 or 25% down when you purchase it. On a refinance, it's simple. It's $272,500 is your maximum loan amount at the 8%. So we know our max loan is $272,500. If our max loan is $272,500, what happens if we're purchasing and we put 20% down or 25% down? What does that equate to as far as a purchase price? Once again, these calculations are in that free download, the DSCR calculator. It's on a separate worksheet. If you have a calculator and you just want to figure this out yourself, all you do is you put in the $272,500 and you divide it by 0.80 or divide it by 0.75 to figure out your estimated purchase price. So in this case, if you're putting 20% down, the 80% is your loan amount. This would equal a estimated or approximate purchase price of around $340K. You put this one in and it's a estimated purchase price of $360K. Once again, if we're using a DSCR, we know we want to at least break even to qualify. We go through the numbers. With this, we found the rents. We went to Zillow or rents.com, found those. We did the research and found out the taxes, insurance, HOA, at least a rough estimate. And we've called the lender for our interest rate. With all of that, we can now do these calculations, and you could run through it again and figure out what our maximum purchase price can be to at least get approved for the DSCR at a 1-to-1 ratio. If you're putting 20% down and you're doing a purchase, it's $340. If you're doing 25% down, it's $363,000. Run through these numbers. When you're out there shopping and looking, you want to at least make sure you're going to make money. It's surprising how many people call in and go, I thought I was going to make money, I'm not going to make money, when they've already purchased it, like through a BRRRR process or something like that. It's sometimes confusing. That's why you just have to walk through this. Go through the examples. Remember, we're looking for expenses to at least equal rents, and then back into what we could do on the purchase price. If you need help with this, if you want us to run through some numbers, we'd be glad to help. Just email us at info@thecashflowcompany.com and we'll run through the numbers with you, jump on a call, whatever we need to do. As mentioned before, we also have that free download, the DSCR calculator. We've now added how to calculate your maximum purchase price by obtaining your maximum loan. So we're going to be able to, if you have those expenses and you have your payment, now what is the maximum loan you could get? If you want to keep the money train rolling, we'll see you on the next video.